Happy New Year to you all. Thank you very much for joining me. And 2019 was fantastic in these markets. The Dow was very technical and some fantastic opportunities in stocks. I mean, Facebook has done over 55% this year. Last year. What is the best way of preparing for the year ahead? What's the best way of preparing for the next month as we get into this 2020? So I'm going to share with you the way in which I prepare for the start of the year and what I expect to get out of the year, what I expect the markets to do in the year ahead. And so I'm going to share with you some hot tips about how I set the markets up. The idea is for this to be to get you involved as well. If you want to ask questions, if you want to come and talk on the mic, yeah, I'll make sure there's plenty of time, plenty of opportunities for you to do that. Otherwise, if you just want to chuck your questions in, you can use the text box. But bear with me for a moment. If anybody wants to contribute and ask questions or talk about how they trade, that's fine. Just text me a message saying you want to do that, and then I'll set that up. But let me just remind you about what I'm going to talk about here. I'm going to talk about bellwethers, just indicators, market indicators to watch out for the general sort of mood and trend of the market and potential reversals. I'm going to be talking about market internals. Yeah, what are market internals and how can you use them? The chart indicator I use, I'm not a massive fan of indicators, but they do have a use. They do have a part to play. I just don't overcook it. I just don't overdo it because the way in which I plot the charts is plenty of information for me. That's all I need. Going to talk to you about my absolute favorite setup and how to predict where the markets could be really pushing up or really pushing down, and also what to do if we end up with a choppy consolidating market. Obviously haven't had that for a while, but there's always the threat of that. Obviously we've got Brexit. We're allegedly coming out of Europe on technically the very end of the year, very end of 2020. We've obviously got the US election in November, and then we'll look for, like I said, these reversals are where I'm going to record this, Joe, and I'll make sure I email it. Good question. Yeah, keep your questions coming, and if I don't answer it, I will come back to it. And yeah, so important reversals, and if we are going to continue trending very well, then where can you get in? How I can trade it? Right. Let's answer some of those questions immediately. Let me just pull that back. I want to pull this over to the side, make sure I don't forget anything. Right. Let's talk about bellwethers. This is a daily chart here. A couple of very basic things that I look at, and one basic thing is I love the Dow, but I talk about the DAX. I do trade the DAX as well. I'll talk about how I trade the DAX and why I trade the DAX, but let's just stick to the Dow at the moment. Now, if you are a Dow trader, the Dow is very technical because the volumes are so high in the Dow. If you're a Dow trader, this is one thing you really need to keep a very close eye on. It's Boeing. Why? Because it's the biggest component of the Dow. So what Boeing does could obviously have a massive influence on the Dow. So a couple of things I need to tell you about my style of trading. Obviously, there's many different styles, and I'm sure you guys have got your own personal styles. If not, you need to have a personal style that you stick to and believe in. But my personal style is a huge fan of Elliott Wave. I think Elliott Wave is crucial to really prepare for these markets and prepare for potentially good moves. And of course Fibonacci. So the two combined are is my edge in the market, and I'll share some of those techniques with you as we dig into these markets. But if you're a Dow trader, which I am, then I need to know what's happening with this Boeing. So what do I expect of Boeing? Well, you can see how we have had a big decent push up into March 19, and because the MAX 737 is grounded and there's still no sign of that grounding coming to an end anytime soon, although the expectation is it is going to be in the coming weeks. Not necessarily hopeful for Boeing's sake, it needs to be in the coming weeks, not months. So they've lost the chief executive. Well, that's irrelevant. Let's just stick to the technicals. But what we're seeing here is huge support in the Boeing here. So if I zone this, you can see that if we close underneath 320 here, then this is really in trouble. If we continue to, if we push higher up here and hold 325 and start closing above 340, this could really be a big lift on the Dow. So I would start to, if we start to close above that 340, I would start to buy and hold Dow and cling on to it to see if we can push up through 360. If we then push up through 360, this could really add a new dimension to the Dow. The next important thing to do is to look at Apple. And Apple has had a great year altogether, but is still that's a new high close. It's not a new high, but it is a new high close. So phenomenal trends, no reason at all to short that. And let's just have a quick look at where, well, I'll come back to this. In terms of projections for Apple, I will come back to that one and talk to you, because I'm going to show you how I project the year ahead first, and then I'll apply it to Apple a little bit later on. Before I finish on the topic of bellwethers and real sort of markers in the market, then this is the volatility index, the VIX. So any increase in the VIX could mean there's fear in the market. It's a fear indicator. This is by the way, this is pro real-time charts, and the ticker is VIX VIX, but most charts do it, or if you haven't got it on your chart package, you can certainly find it out there in the marketplace. So VIX has stayed pretty low. You can see this huge lift we had up here in early 18, and the last quarter of 2018, we saw the VIX shoot up and shoot up, and that corresponds with deep retracements in the market. If you remember the back end of last year, we were selling right into the Christmas period in the back end of last year. But this year, with the exception of the typical sort of volatility you get in the summer months, and sort of little squirt higher in September, October, this just generally fell off, and the corresponding correlation in the market stayed true, and we've had a really, really bullish last quarter in 2019. Okay, so 3 things you can watch there just to really keep an eye on what is the mood of the markets, and what you might start seeing in the markets if you keep an eye on these bellwethers. There are other bellwethers, but let's just keep it simple. Right, let me just, moving on, let's just quickly talk about an indicator I use before I talk about plotting the year. The main indicator I use is MACD. The reason why I like MACD is because if you are trading reversals, which I love trading reversals, divergence in the MACD is a good trigger for a reversal. So let's just call up the Dow here a second. You can see how I plotted the Dow in relation to the MACD. So if you are going to get a decent reversal in the market, then divergence is where it's going to come from. So let's just look at what happened in the back end of 18 into 19 as an example. Here you can see when we were pushing up here and here, the MACD was coming off of these lows, but it was not holding above the midline. And you can see on this particular cell here, you had a divergence on the histogram, and you also had a divergence on the moving averages. So you had a lower high on both. You then got a sell signal on the daily. Let me enlarge this. Sell signal on the daily, and then we came down accordingly. And also, so let's have a look at what happened in the early part of 2019. We saw the market push, we saw the Dow push up here. But look how the histograms were making lower highs. So, and that doesn't necessarily mean the markets are going to fall off. It certainly means that the market is struggling up here. The momentum of the market is low. And so we created a pullback in the markets on the back of that. We did get a higher high on the moving averages, but the histogram didn't confirm, and we subsequently got a lower move in the histogram on that one. This is a key one. If you look at April and May, sell in May and go away. Well, this year was no different. We had very divergent, so we had a higher high in the markets in April, May, and a lower high in the MACD. So although, again, we didn't drop off the edge, we just saw pullbacks. So this doesn't necessarily mean the market's going to collapse or going to crash. It just means likely that the market is losing momentum and you could see pullbacks. And so if you look at the flip side of that, let's look at some bullish moves here. So we saw, whilst this market was coming down here, the histogram was holding up and the averages were a lot higher than they were in the August period. So back here in October, the momentum to the downside was falling off. We only had a couple of down days here, decent down days, and then we started getting a lot of higher closes, pushed above this area here. This middle of October saw us push by the midline, and off we went. So let me show you another example. Let me show you, let's have a look at, there must be some decent divergences on oil. Let's have a look at oil. So what's a key area here? Again, let's look at the back end of 2018 and then work our way through. So we had a higher high. Now we did get a higher high in the averages, but we got a lower high in the histogram. So once we broke through that pattern, which if you've got moving averages that are very, very extended, the chances are the market's going to pull back anyway, because the markets love to come back to their mean average. So if you've got a market that is overstretched on an indicator like this, there are lots of other indicators that are useful, but this is one I particularly like because it's sensitive. I think it's a little bit more sensitive than some indicators. And you can see once we broke it, we had a structural failure here, and then we dropped all the way back down to just into late December, early January, and then we picked up again. So using this indicator through last year, this is not volatile enough to really sort of exploit this and really show you. There's a good one. We just marginally made a lower low here in August 7. In the meantime, we made a higher low in the MACD averages. So that's a really good spot. Massive support in the oil back down there anyway, but that higher low in the MACD was significant. Okay, let's move on. So Matthew's asking, Jonathan's asking about do I look for divergences manually? I do. I look for them manually. Yes. I like the indicator a lot. Okay. All right, that looks interesting. Pro roll time 11. Right. This is the earlier version of pro roll time. I'll have a look at that. Thanks very much for that. But yeah, I'm quite happy just looking at this manually. If we look at, before we move off of this oil, you can see we are making, let me drag this in the middle. Making higher highs up here. The histogram is coming off. So I think we need a pullback. And I'll talk about the area I'm looking for a pullback in oil. I like trading oil a lot. On the futures market, it gives you a lot of scope on leverage. Oil is more highly leveraged than the Dow on the futures market, so profits can be a little bit more significant. Okay, so I'll come back to MACD. I'm not finished with it. I will just move on to the next thing because I don't want to take up too much of your time. It is a bank holiday after all. So let's talk about plotting the year. That's the most important thing, isn't it? Let's just, how are we going to plot this year? Let's just drag the MACD down. Right, let's go to the Dow. Drag that across, pull that up. Right, if you look at, let's look at last year's first, and then I'll move on to this year. So this is 2018. What I like to do is, this is just one technique, but if you just fib the previous year, so as simple as that, just throw the fib retracement tool over the previous year, and then look at what happened on the subsequent year. Now, for anybody who is not familiar with fibs, well, let's just have a reminder for those of you who are familiar with it anyway. There's the outer zone. It's a retracement tool. There's the inner zone. There's the 50%. For those of you who are really into fibs, 50% is not a fib number. Okay, so we'll let that one go. And of course, the most important element of that is the previous year's high, previous year's low, and its extensions. So if the market does break above the previous high or previous low, these extensions are potential targets. So what happened to the Dow last year? We held this zone in the first week and pushed up into the high of the inner zone, ultimately broke the high of the outer zone, didn't quite get to the previous year's high in April, so we pulled right the way back. Just out of interest, anybody familiar with pinball fibs? I'm not going to cover that today. I'm just interested to know if anybody has knowledge of how to use pinball fibs. If If I've got a little bit of spare time, I'll just cover it at the end. Anyway, so we came all the way back to just almost got to the 50% here in June. Then we did breach previous year's high, but you can see how important it was. Yeah, to my mind, it's, you know, the fibs on last year's range played a key part in this year's. The most significant aspect of throwing the fibs on last year's range is if, like I said, if it does break above the previous year's high, in this case the previous year's high, look for the target, and 28,400 was the 127 extension target. Okay, I'll explain the zones just very, very briefly, as it is important. Basically, let me take a clean chart. Let's take the pound versus US dollar. Take the fibs off. Take these patterns off. Right, if you've got, this is the fibs on 2018, and then I'll explain why the zones are important, or how you look at the zones. Right, Fibonacci is a retracement tool, so it's not any more complicated than that. So what you're looking for is these numbers represents, basically you're looking at support and resistance. All Fibonacci is support and resistance. So if you've got the inner zone, hang on 1 second, doesn't matter. Right, so if you are breaking down on a chart like here, if then these levels here are targets. They're potential targets. So we saw a breakdown of the pound here in April 18. So and it's, so I just lost my thread there for a second. This is the high and low of 2018. So if in 2019, so in the early part of last year, if you were looking if you were very bearish on the pound, of course, you know, as you should have been from a drop like that, if this had hit the 50% in the early part of this year, that would have been a great place to get short. It didn't hit the 50% because it was too weak to get there. So if you start to see a failure of this zone, so that would have been a target short. If you start to see an area here that's failing, this is an area to get short. So all these levels up here from 133.90, 132.60, these are all potential areas to short, to then see if you can break this area here and come into this target zone. So once this broke down up here in March and April, then this level here, 129.20, was a good area. Then if that failed, once you've got a breakdown here, then this is a target area. And then if you hold on, you'll note that almost to the pip, this 127 extension down here at 119.62, if I enlarge that, that is just, this is where the fibs get really, really interesting. If you find a chart that's respecting the fibs and you're getting a breakdown of the previous low, so this area here, 124.73, was a massive area here. You got sell signal on the 25th of July 19, and ultimately if you really held on, you would have got a 127 extension. If you're not familiar with fibs, then you really, really need to go away and study it, because it's a massive support to my trading. I think you might find it, you should find it a massive support for your trading. Right, let's tidy all this up. Now we're going to start looking at projections for 2020. So what am I going to do? I'm going to fib the pound last year. Right, so the second half of last year was very bullish. So we trended up. So now, already based on last year's price action, last year's high and low, already into December, we picked up this 129.10 support area. So if this is really bullish, if this pound is really bullish, I would expect this to hold 131. If that holds and we break last year's high, then I would set targets of 139.30 and ultimately 145. So if this is a very, very bullish pound, we could at some stage during 2020, in the early, what I would expect in the first 3 to 4 months, if this is that bullish, if not sooner, we'd see 139.35. If we break above 139.35, I expect to see 145. Okay, if we struggle at 135.10 and start putting in lower closes, then we could potentially come and see 129.20 or wind our way down to these levels. If in the first 3 to 6 months of the year we do drop down here but hold, and then we start to close above these levels, then start to look for these target areas. But ultimately, ultimately I would look for, let's take all these off for a moment. For the first few weeks, as we get into January and into this first month, I would look for this to hold. If it's that bullish, look for that to hold, and then start to tick off these targets. All right, let's do the same on. I don't trade Forex that much, so let's just go back to the Dow. So as we saw last year, from this big push up, let's look at this very, very quickly, bit by bit. So this was fairly flat here into February, March. So we saw a decent pullback early mid-March, reasonable tug higher in April, but it wasn't until we got this decent, once we started getting decent pullbacks into June, so we came underneath this zone and immediately closed higher. So this early part of June was very significant. That was a real clue to the bullishness of the Dow in this period here. We were floundering around to some extent up here, pretty shallow moves, but once we got this decent retracement and it looked as if it was going to come to 50% but didn't, immediately closed above. So we had a new low, close above next day on the Monday. Okay, this little red bar down here is the Sunday Open, the Asian Open. So we got a really good start to the month here on the first Monday in June, and then we got a really nice run for this part of June back in. Ultimately, if you hung on or just kept buying pullbacks, if you're a day trader, then into 18th of June you got really nice pullbacks. That's one key area. Then we had the usual summer doldrums, and this was this brings me into my next subject, a three-wave reversal. Look at let's pull back the MACD here. So let's examine what happened in August last year in terms of the indicator, the MACD, the chart pattern, and the Fibonacci. So let's tie all that together. This is the most, if you do your homework, this is where that homework really pays dividends. So as far as the MACD, we had divergence here because we were making decent lows, we had a decent plunge to the downside here, and these subsequent dips formed a three-wave pattern, three touches of a fairly shallow trend line, and we saw the MACD have shallower histograms and ultimately close above the midline here. But you can see on the moving averages, that's not divergent because we've not made a new low, but it was indicating that the momentum was potentially picking up. There's a lot of higher closes here anyway, so no surprise when we finally bust out of that pattern to see us go back to July highs. Okay, so that's last year. Now finally, I'm going to go on to this year. Let's just let me tidy this up a second. I'll come back to your point about fit. I'll come back to your question in a minute, Joe. So right, as you know now, I am very interested in fibs on the previous year. So let me make sure that is, yeah. So right, I'm going to throw the fibs on 2019. I'll give you some other hot tips on fibs in a minute, some other key things to look for. Right, so we've got a high of 28,722, and a low of 22,570. So the key area of this is going to be the 2019 highs. You can see we had a very bullish close New Year's Eve. If we close above 28,700, then I would look for 38,380. So what happens around here at 28,730 is going to be really crucial. Really crucial. If we start to fail and we drift, we have got some divergence. Just to bring back the MACD, we've got a new high and a lower high in the averages. So we have got divergence here. So momentum in the market is potentially weakening. So we need to close above 28,650 minimum or 28,700 if we're to stand any chance to push higher up here. Close below 28,300 and I would expect to pull back to 27,280. Okay, so in the first week, the first full 5 days of trading, so between tomorrow and Wednesday of next week, I'm going to want to see how we handle this area in the Dow. I'll be watching the Boeing, I'll be watching the VIX, and I'll be watching Apple, and keeping a very close eye on that high and that low. So just to reiterate, that's 28,300 roughly and 28,730. So just let me just look at your questions that you put in there, Joe. Problem with physics price time. You do not need a large account to trade fibs. Always trade within your risk parameters. If you haven't got any risk parameters, then you really must have them. Never trade outside of the risk that you have got, the risk that your account can sustain at the normal 1.5 to 2% of your account level. So in other words, don't never risk more than 2% of your account on any one trade. So so you can either drop your position size down to take that into consideration. If the stop you need to trade on a swing trade is too big for your account, don't trade it. That's another option. I'm a day trader, so I quite often, I'm getting in on these trades, some of these swing trades in a very, very tight price with a very tight stop, or not a, if I'm going to swing trade it, my stop can't afford to be that tight, but if I'm day trading it, it can be tight. So let me give you an example. If let's say, for example, this market, we come up here one day in the next 2-3 days trading, and we get an intraday sell signal up here. I would get a stop into this area here on a short. My entry is going to be around here, assuming I get intraday sell signals. The stop is just going to be above this range, and then I would look for, over a period of days and weeks, a retracement back down to here, assuming we could close under here and continue to close lower. And my target will be 27,300. If we close above here, then ultimately you really need to stop underneath here if you are swing trading it, which is not going to be that big actually. It's only going to be a 300-350 pip stop, assuming you got in up here. Obviously, if you're getting buy signals on this average here, and your stop is under here, you're only looking at 150-200 signal. Then of course you've got the big 29,000. Markets love big numbers. So that would be a first target, and then of course 29.5. But come back to your question. Several points. A, don't trade outside of your risk limits. If it's above, if you need to stay in a swing trade or day trade and it's above your risk limits, don't trade it. Otherwise, stick to these stops and your risk tolerance, and then trade it that way. So that's something I'll be watching out for. Of course, markets come down 3 times faster than they go up. So if we do get a sell signal around here at 7:30 or a failure here at 3:30, then we could see this pop all the way back down here to 27.5, 27.3 quite quickly. You can see as an example, once we fail up here, we get down here in about, inside a week. We do a drop from 27,300 to 25,100 in 4 or 5 days. So the shorts are always that much more entertaining. Profitable, I should say, not entertaining. So lots of questions coming in, so let me just try and plow through them. Back to your original question, Joe, before I move on to the other ones. Yeah, how do I trade it? Well, I would look for, as I'm a day trader, I look for intraday and intra-week signals. The bigger the time scale, the bigger the stop. So if you get a sell signal in an hourly, and we had a sell signal up here on Friday, so you'd have to hold this over the weekend if you wanted to trade this. If you want to stay in that, so we had a lower close here, and then by the time we get to the open last Friday, We had a significant sell signal in the hourly. We were divergent in the MACD, so we had a new high in the markets, but a lower high in the MACD. It's a great sell signal there. If you hung on to that, ultimately we got to 28,400 was a good exit. There's a lot of support down here, like 24,400. Now, if you're trading in a 4 hour, if you're intra-week trading, you should be trading on a 4 hour in my book. You had a 4 hour sell signal midday Wednesday before the markets were open, before the cash market was open. So there's your sell signal. There's your confirmation in the MACD. So a new high in the charts, in the cash market, a lower high in the MACD. So your entry would have been 700. And that's a tight stop, 50, 60 pip stop in a 4 hour chart. And massive support down there at 400. So that's one area you could have used that in. If you're trading in I think 30-minute chart's a good chart. I really like 30-minute charts. You got a sell signal up here. So you don't have to have big stops, depending on whether you're a day trader or intra-week. If you're trading intra-week, give yourself more space, make sure you've got enough room to breathe, and off you go. But these are sort of levels you could pick. Well, let's look at a swing trader, and somebody wants to hold this over. So you've got a sell signal here on the 17th of July. So if I was, I do swing trade stocks, love trading swing trade stocks. I'm a bear raider. I'll talk to you, if we've got time, I'll talk to you about bear raiding. This was a key zone. So if you're a swing trader, you should have been trying to get short here at 27,350. Your stop would be, you could get away with about 100, 120 pip stop up there. And then if you hold it and wait and see if that breaks, you end up with a lovely short. So that's how you could trade it with a tighter stop. You can trade it with a tighter stop by being very, very patient with a limit order up there to pick up a high if you are you're not a day trader and you are looking to hold, buy and hold, or sell and hold. Pick your spot, stick an order up there, wait for the markets to come to you. Don't chase the markets, never chase the markets. Whether I'm day trading or investing, I never trade the markets. Just wait for them to come up and hit the level that you want to get in at. Right, so let me try and get through a few more questions. All right, the divergence is not in your favor. I think that the thing with, if you're using divergence as a confirmation tool, you can trade off a divergence. But all you got to do is just zone the chart, zone the price, look for extended MACDs. So that was a good short. This was potentially a good long. This wasn't, as I said before, this wasn't divergent, but it was showing you. If you're looking to buy lows and sell highs, this is a good way of, this is a good tool to use as an indicator for you. If you want to buy something, then look for overstretched MACD. If you want to sell something, look for overstretched to the high side. Let me think of what's a good. Let's have a look at this particular market. Just to really throw a good, is it this one? And look at this one. I didn't catch this. I didn't trade this because I was watching it in the middle of the year, and I must have got distracted because that's made And that's a three-wave move. That's a three-wave reversal. And there's your confirmation on the 18th of October. New low, close above next day. Actually, you actually got a buy signal there as well. There's two buy signals. There's a buy signal, and there's a buy signal. If you zone it and then put your limit order in, so that's the zone. This is the price cluster. Some people talk in terms of price cluster. Some people this is the price you need to watch on this one. So that's so here in October, 93.60 and 95.40. This sort of area here was the best price to try and get an entry in, and your stop would just have to be under 93.60. So there's your stop. This was the area you needed to try and buy. And then your target, well, what's your target? Well, you have, as I'm a fan of fibs, I would throw the fibs on that. And then what do you get? So this is the target area I would look to get out. I would be getting out at 12.9,260 on a really bullish chart. First target would be 11.530. Second target would be 12.140. For if you're trailing your stop, then ultimately I would get out at 12.920. And the fact it went to 14, well, hey, I will be happy with that profit. I don't know about you, but I will be happy with that kind of profit. And the fact it blows off up here at 14, I wouldn't be too bothered really, personally. Okay, but back to the crucial point is, how can you trade it? Well, look for this price zone here and get a tight stop under there. But the theme of this evening, or one of the themes this evening, is MACD, and that is your divergence. It just narrowly, let me just take all this off. Let me see if it actually makes a new low. Excuse me. No, it doesn't. Strictly speaking, it's not a true divergence in the sense it's made a new low and a higher low in the MACD, but you can certainly see the momentum in the market, and we all need momentum in our trading if we're going to get any kind of run. The momentum was there, the buy signals were there. There's one buy signal, two buy signals. There's your three-way move. It breaches it. So I'm trading gas at the moment, and gas keeps breaching the. I'll show you gas in a minute. Gas keeps breaching the support. I'm not bothered about that, because that, to me, that can be a good sign. The fact the market's come lower and immediately closed higher, that's really bullish. That's a very, very bullish sign there. Silver did this early last year. Silver, it was consolidating, made a new low, and then fired up. So some traders would have been put off by the fact that we had breached the trend line. I wasn't the least bit. I wouldn't have been. I didn't trade this, but had I been trading it, I wouldn't have been the least bit bothered about the fact it breached the trend line. I would have been all over that if I'd seen it. What I was all over was silver. And silver did exactly the same thing before it blew up. So this three-way move is by far my favorite setup. Breach, so on November 18, we breached support here and immediately closed higher. So there's your clue. So you got a clue on the price. makes a new low, immediately closes higher. Fabulous buy signal. You got that is very divergent. That is probably the best example I've got this evening on divergence. Now, don't get too fussy about divergence. The indicators are just that; they're just an indication. So you don't have to have confirmation from a MACD divergence. It is just a guide. To me, it's just a guide. I'm not trading off a MACD. I'm just using it as extra information. What wave are we in the Dow? Okay, good question. Can you also enter a trade? Can you enter a trade intraday and then let it run, building larger stock? Yeah, definitely. Trading intraday, if you're a day trader and you're picking up a spot intraday and you're prepared to hold on, great. And what a great funnel breakout. That's so that the essence of that traded to me was the three-wave reversal. So three waves can take 2 or 3 formats. You can get a market making new lows, but still holding the three-wave pattern. So you get a touch. So the first move is 7th of March 19. You get a touch on 17th of May, another touch on the 28th of May, and then after that's done, you just keep closing higher. Markets love big numbers. So this was 14 down here. Oh, it didn't go as low as 14. Okay. So the main low down there was 14.31. Right, other questions? Okay, 20 divergence didn't work on 1 hour. Okay, yeah, it doesn't always work. I mean, you know, anything in the markets. It's all about probabilities, isn't it? You're just trying to stack probabilities in your favor. That's all you're doing. It's not about, you know, you don't expect certainties from indicators. Don't expect certainties from charts in general. We're just trading probability. You're measuring your risk, and you hope, or you aim, not hope, you aim to get more runners to outstrip your losers. That's it. That's your risk strategy. So stay within your risk parameters, do your homework on the charts, and then take it from there. Any other? Okay, hang on a second. Okay, so let's just, I'm going to wrap up here now quite quickly. So I've nearly been talking for an hour. So I'm looking for this zone in the Dow, having fibbed the 2019 range. So if we break above, just to recap, break above 28,750, I'd look for 29 and these high levels here. If we break under 300, then I would look for this to come all the way back down to 27,300. So that's the Dow. This is the DAX. We have a potential higher close on a trendline support here, but the MACD is actually pointing down. The averages are crossed here. The histogram is underneath. So the zone I would look for on, well, I'd need to see which way it closed out of that tight range. So in the first day or two, back into this week, into next week, this has to hold above 13,200 for my book to go any higher. Close underneath that, and we're going to retrace to 770 and potentially 300. So that's on the DAX, the gold. I would like to see a retracement, absolute minimum 1490. I'd like to see 1490 and then see if we can get back to. Let me make sure this up. I'm sure this is up to date, isn't it? Let me just double check. Yes, it is. So I'd like to see 1490 minimum, ideally 1445, to see if we can then pick up into 1550, and 1600 looks likely, and 1637, and potentially all the way up here to 1750 is possible, but I need a pullback. Oil, oil is struggling, so I really like to see that come back to at least $58. That's a 300 pip drop. Otherwise, if we start closing above 61.50, I would start to buy to see if we can come into 2019 highs. Ultimately, I think we could see 72.50 in oil. Obviously, we need to get up here, close above 63, close above 65, etc. But in the short term, I would really like to see a pullback to 58. FTSE, let's talk about the FTSE. I think the FTSE needs to come back to 74.45. If we hold that, then I think we can then, if we hold that and then close above 77.40, I think we could come up to 8,000 plus. So I need a pullback in the FTSE. Otherwise, I'll start. At the moment, this has come into. We've hit a lot of resistance up here. So we sold off in July, came back all the way down to just under 7,000. We've hit that same area, so there's a lower high at the moment. So that's why I'm expecting further pullbacks in this. In fact, at the moment, 76.25 is potentially shortable here. And then, but the easy way to trade this, I think, is just to wait for a pullback. Okay, so that's FTSE. I'll show you a couple of stocks. Any stock traders here? I'll show you a couple of stocks I'm looking at, and I'm looking at TLRY. Yeah, I like this one a lot. This is cannabis trading, cannabis company. So it got really hot up there at 300. Huge drop off. That's a new low, close above. That's a buy signal. So I'm going to be trying to buy 1630 on that one. And another cannabis stock is CGC. And a really good close on Friday. Sorry, not Friday, on Tuesday. So I'd like to see 1950 on this one. Otherwise, UK stocks. Have a quick whiz through UK stocks. I said I was a bear raider. This is a stock I have been shorting. Looking to short again. It's not in this list, is it? Okay, it's this one, NXT. This popped up on the election news. So ideally, I'm going to set an alarm for. I'd love to see 72.35 to short this. because if I can get short up there and it breaks under that support, that could really come tumbling down. So I've set an alarm up there, and I will try and short that up there. Other stocks I've shorted in the past, bricks and mortar stocks I love to short. This I've been started shorting this about 2 or 3 years ago. This is Macy's in the US. There's the obvious sell signal, but we retraced into so if you look at that August 18 low at 37.85, that was a great place to short. And then once we broke down from there, that just sold off and off and off. Great move. So that was wave 1, that was wave 2, wave 3, and so on. Right, I am going to leave it there. Any final questions? Thanks a lot for all your questions. It's been great to see so many questions from you. It's really helpful when you ask questions. Okay, no more questions. Then I'll finish up. I will publish this recording so you can go over it again. So to sum up, keep a close eye on divergence. Pinball fibs. Okay, I'll just go over that very, very quickly. Keep an eye on divergence. Keep an eye, zone your charts. Throw the fibs on them. If you're not familiar with fibs, then definitely go and find out more about that. If you want to day trade in our live trading room and keep an eye on the stocks and swing trading, then sign up for Scalper School. The price of Scalper School is about to go up. I haven't put it up for at least 2 years. I'm going to put the price up because I'm throwing more and more resources at it. So in order to maintain those resources, I'm going to put the price up. But it's not gone up yet. The next Scalper School, which covers all of these setups and the real humdinger of a golden anchor chart, which we use, and the open entry system we use for trading, is superb. This is what's involved. I'll send you the link. This is the program further down the page. If you're interested, it's currently $575. That includes 1 month in the live trading room and all the alert services you get. Use the PayPal button here if you're interested. The next one is on the 4th. If you pay by PayPal, it says Trade the Easy Way. That's fine because that's the parent company. If you're interested, hook up for Scalper School and then get all the support and all the live trading room sessions on that is included in that. And then if you want to continue with the trading room, that's fine. It's a nominal charge to continue in the trading room. If you look at here, this is some of my, I don't always do screen grabs. I try and do screen grabs every day. 675 profit, 668 profit, a losing day there. Then a 700 profit on that one. The screen grabs of my futures account, so lots there. There's a screen grab of my futures ladder showing the profit. Anyway, keep an eye on that. Otherwise, I will let you see the video, the recording of this. Pinball fibs, right? Sorry, I nearly forgot. Let me just look at that. Let's use it in the context. I'll tell you what, let's use it in the context of this one. So, what's pinball fibs about? It is about Let's take the first fib level here. So it started dropping in August 18, right? So we've only recently, only in the back end of this year, come all the way back down to these November 17 levels. This is a really nice trade to stay in. Pinball Fib says if you, once a 3 and 5 wave move is done, sorry I keep flicking out in and out of this charts. So you've got, let me use the pen. I'll quickly go through this. 1, 2, 3, 4, 5. I've run out of space. Okay, there we go. Do that again. 1, 2, 3, 4, 5. 1, 2, 3. So this area here. This area here is going to be crucial. 1738 for this one. Basically, what Pinball Fib says: if you get a 5 and 3 wave move, you drop the fibs down to the end of wave, the end of the C wave, which is this wave here, the end of the 3 wave from the 5 and 3 wave move. You put your fibs down here, and then in theory, you should continue lower. Let me get another example. I'll have to put it on. Let's put it on oil. Let me go and do it on oil. I think this is going to work on oil. Right. Take all this off. I do the chart up. Let's find the 3 wave move. So you've got 1, 2, 3, 4, 5. 1, 2, 3. Yeah, this is going to work. There's a 5 and 3 wave move. So if I take this fibs here, that low, that high, I'm going to drop it. I'm going to take that fibs. I'm going to start it from the end of the C wave here. And then that in theory projects the next 5 and 3 wave move. 1, 2, 3, 4, 5. 1, 2, 3. That's why I'm looking for 58 lower in the oil. So okay, so here's how it works. There's the fibs for the first move. So I'm going to put so you pick the fibs up and you drop it to the end of the C wave here. Right, so now if we only get a push back to 60, let's have a look. So the idea is now that this then does another 5 and 3 wave move. Okay, so if you did this back in October, that was your first target. That was your second target. We didn't quite get there, and that was your third target. But we have a 1, 2, 3, 4, 5. Now we need a 1, 2, 3 wave correction. So we need a 3 wave correction on this oil, which was why I am ideally looking for. I talked about 58, but 56.50 is a zone. If it's really bullish, then we may only get 60. So I'll watch for 60 in the early part of the year. If we lose 60, I'll look for 56.50. So that's lower than my original target for that. Pinball Fibs is. Anybody's interested, I'll send you a link. You learned it at Symmetry, okay. Right, thank you very much for joining me. I come into Scalper School if you want to join us in the early part of 2020 and beyond. And otherwise, I will send you a recording of this. Stay tuned. I do a session every 6 o'clock every Wednesday. So look out for 6 o'clock every Wednesday on this link, and then I will talk in more detail about pinball fibs and give you an update on these projections. Thanks a lot. Happy New Year, and see you very soon. Bye.